All right, stock market's opening. Let's jump to our Trader's Way account and get on. Trading's risky, not appropriate for everyone. Past performance, good or bad, not necessarily indicative of future results. Bada bing, bada boom. All right, Trader's Way. Let's go to our Trader's Way account. Stock markets are opening. Here we have the Dow. NASI in the middle. S&P 500. We got to mark your lines. Okay, here we are riding a 4-hour 21 on the no diggity, no Dow. It did pull back London, give you an opportunity to kick off that 21. Presumed target here, heading up to, what is that, 4,200? Cool. How about the NASI? Take a look at its bigger picture. Okay, Friday came down to the 21, kick off the roll reversal. There's your little kicker. Holding above the 21 today. In the last couple of hours, it did a test. Weekly target, if it continues up, is significantly higher. Whoa, 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 whoa. 20,350. Oh my gosh. And then let's look at the S&P on the open here. Go out to the 4-hour. Once again, beautifully riding the 21. And if it can maintain the rally, we're going to be up to about 5,800 by the end of the week. If we can. That's a big if. Right now we're caught on the M3, which is a tough line. So there are some bears here defending, but we'll see if we can continue the risk on. Hang on, I left a fan on. It's loud. Hang on. All right, it looks like I didn't bring up the chat. Hang on, let me bring up the chat for Monday. There it is. Let me actually move it around. Now let's check our implied volatility. Let's go to traders.com. Let me pull up a page for that. I guess it's this one. Is it? So for those that like to trade market opens, news event, news flow, all that kind of stuff, one of the best cool tools here is implied volatility. Yeah. Lots of great things to be trading right now. Dow is one of them. Okay, it looks like the next hour we could hit that 42.2. This is what we did on the chart when we had the no diggity, no Dow up there. So let's bring it back. Okay, I had it go coming up here, 42 and some change. And look, it's even moving now. Obviously, the market just opened. So this was something that you could have been on a few hours ago. But you see looking at implied volatility, it looks like we should be able to get up there. Okay, 4250 to 4300 is the implied 4-hour and daily high, but using just pivot points, we get the same result. Yeah, pretty cool. Oil's a good thing to be trading right now, on Mondays at least. Okay. Mondays at 9 o'clock, this is a good thing to be trading. With them looking at implied volatility, remember it's non-directional. But if you're a bull on oil, looks like we should be able to tickle 73. Not quite. Pretty close to 73 in the next 4 hours. Looking at a 4-hour candle. Silver, look at that. Dropped down to the implied daily low and bounced. Very interesting. So just in case you're not sure how to read all of this, what we're looking at are the best assets to trade Monday at 9 a.m. in the 9 a.m. hour. Okay. In fact, what it's looking at is from 8:30 to 9:30, because it's 9:30 now. Right, you see? Okay. Yeah. Anyways, take a look at some other things. FTSE's pretty good. You guys like gold? You guys like Bitcoin? Popping up gold here. We hit the implied 4-hour high and it dropped like a ton of bricks. Okay, implied low for the hour and 4-hour is down here at 62,500. 62.5. Yeah, volume should be increasing in the next couple hours, so be interesting to see what it does next. Like, for example, if you are already a bull, remember volatility is non-directional. Your trade plan could be, like this. If you're going to be a risk on, if you're going to be a bull. What else could we be looking at? Like, there's a lot of things that move very, very well this time of day. Yeah, in fact, we're all the way out. Everything moves well this time of day. I just went to page 3 of all the assets, including stocks. Everything moves very well this time of day. In the next couple of hours, you're going, you could throw a dart right now and be on a good asset to be trading. But soon, in the next, let's say 90 minutes, there'll be a big difference between trading something good and trading something with mediocrity. What's on the calendar? Okay, we have an RBA interest rate decision. Do you guys ever look at this and then forget? Well, I have a solution for you. Just put it on your calendar. There you are. Australia RBA interest rate decision. Save. Just solved a problem for you. If you see it here, we coach it live now. If you are part of the news trading group, or Traders Pro. Trade these live. You have a live coach to help set them up. And we use this tool. So like if you're interested in Jolts, Jolts actually produces a reliable, repeatable pattern. Yeah, I wouldn't have thought so, but quantitatively we found that to be true. So like pound dollar, if the actual comes out consensus, we see there's a scalp and an intraday trade. For some reason, there's not a day trade, but there's a swing trade. Why? I don't know. That's just what has happened when you analyze these things. So you look at the scalp. Okay, 60s, right? If it's greater than consensus, if it's less than consensus, and here it is, and you're like, okay, great. And you can have it tell you, how did it get to these conclusions? So it's strange, like if it's greater than or less than, it's still going to go up. Doesn't make sense, does it? No, but that's history. It doesn't have to make sense. It just has to be reality. Here's an example. If it comes out at greater, the other one is less than or as. Okay, less than or as, greater than. So that, so you want to put all this stuff on your calendar. They're event-driven strategies. High volatility event-driven strategies. Okay? But that's not the only thing to the news trading, right? The scalping group also does trades that have come to fruition. They're not emerging patterns anymore. They're actual patterns. And so, which means much of the trade has already occurred while they were emerging, right? But now that they've come to fruition, that's why I call it a scalp, really, because many of these trades only have a few pips left in them. But you could look at this and say, okay, USD Kitty Cat definitely broke that pennant. And by the way, this is a continuation pattern. Down, down is what you would assume. Cool. So even this, my next trade, if I were me, would be to think about something like that. But it comes up on the radar because, it's happening, and what it's doing is it's measuring this distance and then projecting it to here. And then take that same distance and take it from the bottom and measure it to here. It's just a pattern. Okay. And a pennant looks at the previous trend. So it assumes down, 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 and then there is a breakdown. So in that case, when it made this a live trade, we were here. Okay. And so this went up for scalpers on the news trading team, and it came down and it's fallen for 3 hours. Now we're almost at target, right? But that's why it's there. To me, very little meat on the bones, and that's why I throw it down the way I do on this group. And of course, volatility is like, okay, this is what you would expect to move. Cool. Global Investor says Bitcoin could hit 85. Yeah, sure. Well, it could, could. Could doesn't mean much, right? But, sure. When you say stuff like that, Global Investor, I want you to follow up with some rationale. Right? You have to give me something I can quantify. Otherwise, it's just an empty opinion. So I'm not disagreeing with you, but it's an empty statement. It's like me saying, well, I think Bitcoin can go to $1 million by the end of the year. And you're like, ooh, why do you think that? I don't know. I just think that. Right? Now, if you followed up and you say, well, because the Fed will be cutting interest rates the next year and a half to 2 years, and that'll weaken the US dollar, and that will not only just by itself push up the value of Bitcoin priced in dollars, but it will also sustain medium-term US dollar weakness will just bring things like an increase in aggregate demand, which is the demand for everything, including Bitcoin, but also on top of that, more interest in hating the dollar, being anti-dollar, being anti-fiat, and more pro-digital. Okay, great. All of that I would accept. Okay, GI? If dollar is seasonally strong, okay, seasonally weak, seasonally weak, seasonally weak, seasonally weak, seasonally weak, seasonally weak. So that's a big if to car. All right. Oh, I just did this, didn't I? All right, let's look at some technicals. Let's see what patterns exist for the U.S. stock market. See, this triangle is not a pennant. So it's not paying attention to the previous trend. Why? Well, that's not the pattern. It's a different pattern. Same thing, triangle. So I want you to know the way I'm going to teach you, because I think you all want a pattern course. I get that sense. I just assume, since many of you started with technical analysis, that you learn patterns. It's just ABCs of technical analysis. But maybe that's not true. I don't know. It's been a while since I've learned, right? So if you would like some pattern stuff, okay, great. I will teach you that triangles have no direction. Thank you, Eskimo. But see, like Eskimo, like I just showed you on the previous page, it's a good number. It's an interesting number. It goes into long-term fundamental biases for things like US dollar. And I do review the PMI. I actually read that report. And I compare them with other PMIs from other different countries. So it's all important, right? Here's the thing. It's not important for trading. And I would know that because we analyze this. Does it provide volatility? If yes, does it provide a repeatable pattern? And if yes, then put it in the news trading team, right? Under scalping. Put it in the scalping section. I looked at it. It's not in that, so therefore I'm not interested in trading. You're just getting risk and no reward. That's the best tool. The best part of that tool is you're taking risk and you're not getting a reliable return on that investment. So it's just like skip that one. Okay. Right, Dakar. So that means US dollar weakness, but what I just showed you is that's seasonal. Yeah. Okay. Global Investor says price starting to break out of current descending triangle. Okay, so you're doing a pattern. I'd like more from you than that. Okay, you got a pattern. Look, I'm talking patterns too, right? But you need to put the pattern inside the context of fundamentals. Okay? So, for example, the reserve currency, the fiat reserve currency. Now, you may not like it if you're pro-crypto. That's fine. You don't have to like it. But it's real. So the central bank for the entire world, let's just say, because we're talking about the reserve currency. So the world's central bank has just devalued the U.S. currency. Now, that's not quite true, but when you cut interest rates, the value often falls. So let's just pretend it's a devaluation scenario. It's killing the dollar carry trade. Great. I want you to start with that. And then you say, because of that fundamental analysis of just global macroeconomics, that's not even fundamentals of Bitcoin, but of the macro scenario. The value of Bitcoin goes up because the value of the dollar goes down. Dollar buys less Bitcoin. So maybe nobody bought Bitcoin at all, but in terms of dollar, it goes up. Literally, that's why they call it the term, the quote, right? In terms of dollar, Bitcoin goes up, and it has nothing to do with Bitcoin. Okay? Now, the second thing is you could say, well, because of that trend likely to continue for years, there can actually be an increase in demand for Bitcoin because nobody wants to hold a currency that is almost certainly going to lose value. So you're like, well, you know what? I'm going to dump a sure thing loser and convert it into something that might be a winner. So aggregate demand, or in this case, demand for Bitcoin can go up. Okay, great. So now we got you there, okay, global investor? If you started with that hypothesis, then you would say, under those circumstances, I would look for technical analysis to confirm a bullish move in Bitcoin. And then you say, aha, we have a descending triangle that seems to be breaking to the upside. But I only want you to come at me with technicals to confirm your hypotheses. Because in my humble opinion, it's ridiculous to trade a pattern without reason. Okay? In my humble opinion, which means I'm allowed to say anything I want. Right. So, in fact, why don't we look? Okay? And Bitcoin, non-directional in the moment. That's now. That's today. Bitcoin, a big move here last week. And you know what really makes me mad? I was farting around. I'll admit it. It's been bothering me for days. I was at Starbucks. I hadn't slept in days. I was working and I'm watching my charts and I got a position on Bitcoin and it was on a 15-minute chart or something stupid. I can't believe it. I saw a big red candle and it scared me. I don't know why. I was tired. I shouldn't have been trading. Shouldn't have been watching the charts. Should have just been doing my job. And so, I bailed, dude. I bailed. I bailed here. Oh my God. Like down to maybe even a 5-minute candle. No, I don't think so. I got out on the last, lowest, dumbest 15-minute candle on that pullback. Oh, son of a... Now, I had bought it down here, so I don't cry me a river. But oh God, I missed it. And it's just I shouldn't have been trading at that time. I shouldn't have been watching it. I should have been focused. I looked down. I'm like, oh my God, that's not good. And I made an irrational, emotional decision. And I got kicked in the pants for that. Look at that, how much I left out. Terrible. Terrible. Oh my God. What the hell was I thinking? And no, not fear. I don't know. No, afraid of what? No, there's no fear. But it was reactionary, and I don't know. It was a screw up, but not fear. No, I don't have fear. Remember, like literally, and I hope this doesn't come across wrong, but when every decision you make is somewhat logical, or at least you try, based on fundamentals and technicals, there's no fear. Everything you do makes sense. And because it makes sense, you clearly know when you're wrong. And I mean, there's no fear, honestly. Now, it doesn't mean I'm right all the time. I make mistakes, but I know very quickly when I'm wrong because I knew why I took it, and then it does something different. So, my mistake lied in the fact that I wasn't focused on trading. I was focused on something else. But, I love staring at charts. I love charts. And I just saw it collapse, but at that time of day, and I don't know. So it was just dumb. It wasn't fear. It wasn't greed. It was just dumb. I'm like, oh God, out. Yeah, it cost me some good money. That's some good money, bro. That's some good money. So yeah, just dumb. Just dumb. Just, it wasn't a bad decision. It was no decision. It was a reaction. All right, 10-year T-note. Here's the problem. This is interest rates going up as prices falling. And I want 10-year T-note, which is the ZN here. I want this to rise. Right now it's a falling wedge, not good. And likely it's going to continue. And in fact, we have a sell this morning at the open. That's a sell. That means yield on the 10-year is going to go up. But what I do want to see, I want to see this get like a inverse head and shoulders and change direction, have price go up, and therefore yields come down. Because I own the 1, the 2, the 5, the 10, the 20. Okay, I own them, and I own some corporate. I think I own a 3-month, some 3-month in there, and I own some mortgages, which is 30s basically, right? So I'm from 3 months to 30 years, and this ZN represents sort of the aggregate of all of that combined. If this is going up in price, these are all likely to be going up at different degrees, and that we call that duration, different degrees. But right now, they're all likely going the wrong way. No, going the wrong way. But I'll tell you what, if it changes, then, I can get back in and maybe buy some more. I have some cash. Amazon breaking to the upside. Nice little move here. 12% rally in 14 days. Hey, not so bad. Meta looks like it's got a directional breakout. So this is good, right? Why? What's the first part of this? Do you remember what I taught you a week ago? SWOT. Okay. Is an ascending triangle strength or weakness? Anybody want to throw down an answer? 50-50, huh? Is an ascending triangle strength or weakness? No, wrong. It's very decisive. I said a triangle. This is different. Daniel says strength. Why? What makes you make that determination? Anybody? Anybody? Bueller? 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 Yeah, well, yeah, why, Juliet, right? Why? Yeah, I know. I'm agreeing with the strength, but how do you know it's not the opposite? Lower highs or higher lows? Yes, but you guys are missing like the most obvious. It's ascending. It's ascending, which by definition is higher lows, right? So I want you to get really good at knowing your patterns. It's like, that's an ascending triangle. It's probably going to break and continue. It just is stuck at a price level on resistance, but it's got no problems on support. Okay? So it's strength, not weakness. So is this an opportunity or a threat? Opportunity. It's ascending. The pattern is ascending. This chart is going to ascend. It's a threat if you're down here and it says ascending triangle, is potentially breaking. That's a threat to bulls. Ascending triangle, up. Breakout to the upside, opportunity. Well, you could trade it both ways. Okay, here. Okay, but it's already broken. Okay. But you should pull it up on your chart. Look, right? It's actually pulled up, right? Yeah. Game on. But you should already know the ascending triangle is in play. It is emerging. Okay? And what you're really doing is predicting the future, right? And so, Denise, I believe what you're saying is, yeah, you'll pick that one up. Yes. But this is also, you might find on smaller time frames, it's scalpable, and you got little moves like that. But the thing is up. Up is up is up is up. Up by the dip on a 5-minute chart, up by a dip on a 15-minute chart, up by a dip on an hourly chart, up by a dip on a 4-hour chart. When you put them together, it looks like that. Okay, on a smaller time frame, lots of ups, lots of downs. Okay, on a bigger time frame, simply an up and a down and an up. Same. But I want you guys to get really good at is the pattern showing strength or weakness? It doesn't, right? Remember, it's not a signal. It's either showing you short-term up or long-term short. And you need to fit this in with your own bias. Okay, right? Like PayPal. Channel up, bullish. Okay? Leg up, bullish. What if you're up here in the future and we're at this price? Strength or weakness? Strength. Opportunity or threat? That would be the threat. The down arrow would be a threat. And in the future, you want to, okay, buy one of these. When you buy low, it's an opportunity. When the price is high, it's a threat. In particular, when TRADARS says, okay, we've hit this, the next leg is more likely down than up. It's just a leg in a pattern. Okay, and all this has nothing to do with stocks, or in this case, treasuries. None of this has anything to do with crypto. None of this has anything to do with stock indices or commodities or Forex. They're a form of technical analysis that is based on pattern recognition. Okay? Pound CAD on a 15-minute chart. Now, it's only a 15-minute chart, but let's go with it. Okay? Does that pattern show strength or weakness? Yeah, weakness. Okay, is selling high an opportunity or a threat? Yeah, it's an opportunity. So how about this one? Channel up. Strength, weakness, strength or weakness? Cool. Is buying low an opportunity or a threat? Did you notice it's 300 pips? Okay. Look, I don't think you can catch all these opportunities without TRADARS doing the grunt work for you. If you're doing this manually, you're probably missing more than you're catching. Just look at all these legit patterns. Okay, amazing, right? Very cool. So now we're at 10 o'clock. I wonder if we go to the scalping tools again and go to the implied volatility, the IV radar. I think things are likely tightening up more and more throughout the day. Oh, that's interesting. How come the page doesn't fit? It's not loading properly. Hang on, let's see. Huh. It's not loading properly. I can't see page 2 or 3. Nothing should have changed. But anyways, let's do this. Let's go through and kill the stock. Okay, kill stocks. Oops. Kill them all. I like the 10-year. I'm going to keep the ZN. Cool. Neat little trick, right? All right, what should you be trading? What should you be looking at right now? WTI and Brent and silver and the Dow, for example, huh? Still, there's the bottom. So still lots of cool things to be looking at. Go to page 2. And yeah, still just pages and pages of awesomeness. Okay, that's cool. That's cool. Let's thread the needle a little bit. Turn this stuff off maybe. Open this up. And turn everything off, but maybe like yen pairs and dollar pairs. How about that? How about just yen pairs for now? See how they run, see how they run. All right, you ready? Okay. So earlier today, based on quantitative analysis of the day, this was the implied low of the day. Huh. Whoa, dude. Whoa. Hey now. What about euro? See, this is a quick way to get the quick and dirty on charts, huh? All right, what do you think about this? Our implied low for the day on euro yen was here. So think of it this way. If you're a bull and you come down and you hit the implied low for the day because it looked at Mondays going back 6 months. And when you add up how much euro yen moves on Mondays, that would be the implied low of the day. Oh, and that would be the implied high. Good to know, right? Here's the rolling 4 hours. Here's the rolling 1 hours. So what it's saying is this candle will probably go no higher than that. Because we're guessing the size of this one candle, right? Yeah. Cool. Neat. So what if it came down and you were a bull and you missed this opportunity? What could you do about it? You catch it down here and now you swing. You buy it on the 4-hour implied low, but you swing it to the daily high or weekly pivot point. And your stop would go just below the implied low of the day. Even though you bought it here, what is implied is the probability of it doing this is extraordinarily unlikely, quantitatively. Something really would have to be unforeseen and happen, like we come up here and then a total collapse. Well, usually you get news to do that. Is there anything on the news that might radically shape this? No. The one thing the world knows is that the Bank of Japan's not going to cut interest rates till the end of the year. That's one of the reasons why this is climbing now fundamentally. Okay, we knew that a long time ago, but the rest of the world just found out about it last week, and so that's what they're trading now. Cool. So what would need to happen to suddenly get this to collapse? Well, lots of things could happen, but it doesn't seem likely, right? I mean, anything could happen, but that would be unlikely. So anyways, someone might be using that as the low, and their stop would be down here. And if you caught a pullback, you could also put your stop down there. And the rest is, do you go for the 4-hour target? Do you go for the daily target? Do you go for the weekly target? Do you go for the monthly target? Or do you hold till the end of the year? Well, that's for you to figure out. This is just telling you what's likely to happen in the next 1 hour, 4-hour, and daily rolling. Remember, it's rolling 24 hours, rolling 4 hours, rolling 1 hour. So it's constantly updating. And so you can just sit on this page and it'll update. It'll update and it'll update. So let's quickly look at Swiss franc versus yen. Okay, kicked off the daily low. Let's look at Aussie versus yen. Kicked off the daily low. Remember, you're like, wait. That's not my daily low. No, it's not your daily low. This is not on your chart. This is the implied volatility daily low. So we got a projected bottom and a projected top for the day. And it's not today, it's the next 24 hours. So by the time we get to meet again tomorrow at Forex.Today, the thought is we would come up to here, probably come back down to there, and then probably come up to here. Meanwhile, these lines are going to shift, and the numbers on Tuesdays are a little bit different than Mondays. So these ranges are going to change. But the general idea of if you're a bull, you buy low, right? So is it plausible that your technical trade plan could be based on things like implied volatility? That's precisely what I'm saying. Okay? But the thing is, when you have all these assets, like I said throughout the day, let me put these assets back. Okay. Yes. Oops. Yes. I sound like Sally from When Harry Met Sally. Yeah. Cool. So right? So when you're using this tool, and let me turn stocks off, because I don't even buy individual stocks from my personal account. But you could sit on this tool and watch it throughout the day. And it'll just update. As time goes through, it'll say, trade this, not that. Trade this, not that. Trade this, not that. It'll become more and more important throughout the day to know what you should be looking at and what you should ignore. Okay. Cool. So for those that are not part of the Pro subscriber package or the news trading package, I guess I should maybe rename that scalping and not news trading. But anyways, you do have a new seasonal tool, which is really cool here under the seasonality scanner. And VIX is likely to, based on past performance over the last 10 years, the next couple of weeks are quite volatile. and the September to October volatility will fall by a lot, 50%. Cool, right? It's neat. So you got to be careful. Okay? You got to be careful. This year might be different because of the Fed cut. But we know the reality. Okay? Cool. All right. Now, based on the Fed cutting, I would lean toward risk on. Also, we're doing technical analysis, right? So what does technical analysis tell us? Well, 21 is above the 55. Okay. We're riding the 5. We're riding the 5. We're riding the 5. And then it cools off and we're moving sideways. And then we get the 21 kicker. Okay. And then we're back up, riding the 5, come down, 21 kicker. It is slowing down. There's no doubt about it. But there's no way I'm going to bet on this. That could happen. I don't know the future, but there's no way I would bet on that ever under any circumstance. So I either don't trade or I trap and break. Okay, now I always look at it that, but TRADARS is teaching me to be a little bit better at this scenario. TRADARS is saying connect these bottoms and leave the top. Okay, so now you have a rising wedge. A previous uptrend okay, and we're caught. And sometime, and very often near the apex, you get your breakout. But never, ever, 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 ever short. Good to know. GDK. Good to know. Okay, it's strength. And we're seeking opportunity to the upside because we don't see any threats. Now, let's change the situation. Let's say today we had a down day. So we have up, pull back, up, no higher high, higher low, up, no higher high, higher low, up, lower low. Now what? Now it's a threat. Lower high, lower low, then probably back up, then probably down, then probably a top, and then back new low, and then yeah. Okay? So that's why when TRADARS throws down like an uh-oh scenario, it's not an opportunity, it's a threat to bulls. It's not an opportunity for bears. And I'll show you, like, it's a different process, but it's the same thing. I have biased pivots, and let's say, okay, I'm a bull. I go here, and it's like the if-then statement. So let's redraw. Oops. Let me get rid of this. Okay. Let me redraw that wedge that TRADARS would have done for you, right? So we're connecting this, and we're connecting this. And sometimes you see TRADARS that shows you a gray arrow and a down. Okay? And it'll show, let me put this in gray. It'll look like this, right? If that happened, that would be very significant to bulls. Okay? Because it sets up the possibility or probability of bears actually entering the game. It's a very significant threat. It's not a trade signal. Because here's why it's not a trade signal. Because if I was a bull on a daily chart, you know what I would do if I were me? First of all, I wouldn't be staring at this silly little 4-hour chart. That's for retail, right? My trade plan would be higher high, look left, buy the dip. Okay. Oops. Okay. Buy the dip. And the goal of that purchase would be this. I don't like it on a 4-hour if I'm watching because it shows a little more sensitivity to the bearish potential if you're a bull. Okay? And what you could then develop is this. The red flag when you should be very sensitive to this potential change is right here to here. So that's why TRADARS is like, okay, bulls, this is a rising wedge. It's an opportunity. And the probability is something like that. And it'll keep showing you that over and over and over again. But if we get just a wick below that bottom line, it's going to show you, uh-oh, be careful of the downside potential for some reason. Price is acting like there's some bullish weakness, not bearish strength. Good. So you have to know context, right? Yeah. Cool. So you just need a training course, right? Would anybody like a training course on all the patterns? All right, so just Roderick is going to get it. Roderick's going to get the secret passcode to unlock it. Yeah. Oh, and Denise too. Well, the thing is, the truth is I haven't made one, so... I haven't made one, but who knows? That could be something I can bust out in a day. Cool. So how often do rising wedges work? How reliable is this pattern? Well, let me step back. How many people here have already taken a course on patterns by some guru or some group. Remember there was like Market Traders Institute or something? I don't know if they're still in business. People used to just say terrible things. But is anyone willing to admit they've taken a course by a guru or a group on patterns, in particular patterns? No? Really? Nobody? Wow. Hey, Peter, we need to talk. Are you going to be available later today or this week? Send me an email with the time. MTI, 10 years ago. Denise did. So they'll tell you how to trade an inverse head and shoulders pattern, right? Most likely. I mean, I didn't, right? They're like, okay, it's trending down, then it hits support, it makes 100% pullback, then it comes down, and then it looks at the left shoulder, and it goes like this, okay? And then you draw the neckline, and then you take the bottom of the crown and you measure to this distance and you take it from the neckline so that if the next move is, through here and up, it's going to extend. And they teach you how to put it together, right? Yeah. Hey, Peter, email me, okay? Maybe we can meet right after this meeting, or you tell me when. I have one meeting in early afternoon. Okay. Cool. And trading back to the 3A2 and 618 are the patterns. So it's the same thing. Yeah. Okay. Great. Okay. That's what they taught you. How do they know it works? Because they were taught by some other guru or by some other group who read someone else's book. And all of this stuff goes all the way back to some guy, read a book or took a weekend training course at a hotel in 1983 by some commodity traders that were using technical analysis of daily charts only. And once a month, they would get an update to the charts. And it was a pattern back then that worked when there were no charts. You actually subscribed to a book. And once a month, you'd get a book of all the charts. Okay? Or Richard's like, great. Took it from the CMT, which got all that information from what I just described. Bunch of old people trading before computers. And they're like, that's how to trade an inverse head and shoulders pattern. Okay, great. How many have they measured? And how often did it work? And they don't know. Interesting, isn't it? Yeah, it is very interesting. Prairie. Oh, man, I can't type today. Yeah, Gan. Cuckoo, cuckoo. All right, cool. So we could look at, let's see if I remember how to do this properly. Okay, so we are looking at a rising wedge. right? Rising wedge. TRADARS has seen 618 of them, of which 406 have worked with a 66% accuracy. Shut the back door. Oh my God. And all your gurus you paid money to have no clue statistically of what they're teaching. They're just teaching the pattern that they were taught, and they think it works. And they'll teach it the way I taught how to trade an inverse head and shoulders pattern. They know precisely how to teach it because they were taught how to teach it. Then you're like, okay, well, if you saw it 618 times, how many times would it work? And they're like, 404. No, they have no clue. No clue. They didn't write down every single instance of an inverse head and shoulders, or in this case, we looked at a rising wedge. They didn't write down every rising wedge and watch to see if it worked or not. You are so far advanced compared to the average person in trading and investing when you're using TRADARS, right? Traders.com puts you on par, if not even a higher level of decision making than even institutional investors. And that is not hyperbole. You know what to trade, when to trade it, why to trade it, and whether you should let it run or take profit. You know all these things. You're way beyond 95% of the market if you actually care to use the tools. Cool, right? Yeah. Yeah, very cool. Okay. Yeah, very cool. Just a couple of updates when we go to the community section. Okay. So you can see people are using the community, right? That's good. Very good. I want to show you that we don't have any new challenges. How many people? So 21 people actually did the old and challenge, so I appreciate that. Going to webinars, I want to show you that we are doing, for those that have subscribed to Pro and for the news trading team, we are doing live news trading events now. Okay, we have people coming to the day trading group was great. People are coming to the fundamental, which is the swing trading group, and Quant Box. Here's a swing trading group. So we got people RSVPing. That's great because they're going to get the reminders and the direct links. And just for those that are fairly new and they don't know where to get the recordings are up here. And of course, you only see the meetings that you have access to, and you only see the recordings you have access to, which is nice because it keeps everything clean and organized. You get what you need and nothing more, nothing less. So here's, we met last night. The day trading group met last night on Sunday. Good. All right. Let's get going. Looks like we're recording at 7:02 on Wall Street, and the world is awake. It's another week for us. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad. Okay. Not an alpha. Maybe cool. I'm incorrect. Nice, right? What was the other one? Oh, yeah, the other thing I wanted to highlight is last week I unlocked a training course in TRADARS introduction. Okay. 0 out of 10. Yeah, someone said that one of them was missing. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Nope, they're all there. So there's 10 lessons. They're about 10 to 15 minutes each. Right? This one's 13 minutes, huh?
One EMA. And we now find ourselves coming up towards that daily target. So once I've got that big green candle, I've definitely confirmed the fact this is not bearish. So what I can do now is I can jump onto my M1.
Oui. Das ist gut, ja. So anyways, TRADARS is great. TRADARS is good. TRADARS is wonderful. So maybe sometime soon, and maybe that's a better than a maybe. Hopefully, wouldn't it be great if we had a full how to trade patterns course that would help you make better decisions with the tools that you have? Cool, right on. We should probably do that, right? So much to do, so much fun. Peace on earth. May the pips be with you. May your profits be above average. Thank you to you. Thank you to Traders Way. Get yourself an ECN. Do yourself a favor. Yeah. And for those that are in the CIA, what do you think about a quick meeting on Wednesday? I think a Wednesday might be okay, like a real quickie. I think we have to have a conversation and then invest some money. Is anyone here for that? Denise? Anybody else? Are you available Wednesday noonish maybe? I got to send out an email, maybe do it that way. But I am leaning on like Wednesday at noon, just eat a sandwich while we're in our meeting. It's been a busy month. Yeah. So Richard maybe will do the training course on how to trade patterns. Wednesday is good. Right on. So anyways, I got to jump, babe. That was real. Peace on earth. May the pips be with you. May your profits be above average. Cheers.